Kevin Lings is the chief economist at Stanlib, and you may well have seen the discussion that we had about a month ago where he unpacked how South Africa's economy had performed since 1994 and basically gave us a path to prosperity, and we've done it before, and then a path to penury, and don't we just know we've done that one before as well. Well, 9,500 people have already watched that video, but the important thing was they spent an average of 9 minutes each, so it's quite a lot of absorption. Today, we're going to talk about Eskom. Kevin, I've said it numerous times to the business community. I'm a huge fan of your weekly raft of images and graphs that you send out, which actually proves the point that a picture does tell more than 1,000 words. But why did you decide to put so many Eskom graphs in this time round?
Well, obviously, there's such a huge focus on Eskom, and the more information I think that we have, the better we can make decisions. And for us, it's all about, investment decisions and business decisions. And so I think that there's an array of data, but the problem is it tends to be quite complex, and it tends to be linked to a whole lot of terminology. And I think that does limit the accessibility of what's going on at Eskom. But from my perspective, it's just trying to get that information out, and we'll keep updating it on a weekly basis and try and see what the trends are and whether they are a little bit more encouraging. Obviously, more recently they have been, but I think you've got to kind of unpack a multitude of factors to kind of get an overall impression of what's going on in the energy space.
And haven't we just learnt that electricity is so important to an economy? It was the second industrial revolution. Now we're in the fourth. So I guess if we lose the second, well, we go a long way backwards.
Sure, absolutely. So you can't function in a modern society without regular and reliable energy supply. I mean, Reserve Bank made the point that it's costing us 2% of GDP. I think it's costing us more than that in terms of lost opportunity. You can imagine how many decisions are not being made or being put on hold, how many potential foreign investment ideas are simply being moved or shifted to another country. There's a huge array of costs that South Africa has already incurred as a consequence of this. So it's and also you can't have a discussion now if you're going to talk about an economic update. You give feedback to investors, clients, foreign individuals. I met with some people from Washington about a week ago. They opened the discussion with, tell us about what's happening with electricity. It just dominates the entire discussion. And yet, if I reflect on that debate we had with the people from Washington, that there was so little time after we'd got through the electricity discussion to discuss anything of any other substance. And I think they left fairly unconvinced about the path forward. And even when you travel internationally and you try and explain load shedding, to somebody who's living in Europe or in the US, it's a very difficult conversation. So no doubt we can't move forward without resolving this electricity issue.
Yeah, unthinkable in many people's minds that you have certain times of the day where there is no electricity, or you just got to make your own plans. And I guess the private sector is coming to the party, as we'll find out in a moment. So, Kevin, I'd like to start sharing some of your images, and let's get on to the first of those, which is just having a look at starting with load shedding, the big story on load shedding. So you pointed out, stage 4 or higher has really only been with us for about 5 years. Why is stage 4 so relevant? Why did you have a cutoff there in your data, as it were?
Because it's at that point that it starts to really have an impact on the economy. If you go to lower stages, let's say you're dealing with stage 1 or stage 2, what we found was there wasn't a very clear, measurable impact on how people change behavior, on how people traveled to simple things, shopping centers, or decided to undertake particular business activity, they were able to accommodate the lower levels of load shedding. And so, yes, of course, there's some negative impact, but it wasn't, you couldn't map it that well in terms of the economic data. It didn't show up in all sectors equally. It was something that we could probably have lived with for a longer period of time. But once we got to stage 4, things changed. And it changed because now you have to make an alternative plan. You have to either close your business during those hours, you have to get in additional power, which means you're spending money on diesel or some form of other renewable energy source. You're having to structure when people arrive at your business. You're losing business because people are not arriving. People make decisions to avoid traffic. So it changed the dynamic of how the economy interacted with the load shedding. And stage 4 was the kind of cutoff point. And there's no doubt that stage 4 has intensified the levels in terms of how much of stage 4 we've had. And so it's had a devastating impact, you would say, I would argue from about October last year. You can see how many what we call orange dots there are. From, let's say, maybe September, it started to be very prevalent where you have load shedding every single day. And a lot of those days of load shedding were then stage 4 or higher. And obviously, at any point, if you get to stage 6, massive impact on the civic and economic performance. And the Reserve Bank highlighted very critically that the impact is not linear. In other words, for each stage of load shedding, there's an increasingly severe impact on the economy. And so we saw that in the data, stage 4 and higher. You can't sustain that in terms of a modern society. And a lot of things will simply go backwards if you try to live with that for, let's say, a full year. You would decimate businesses and economic activity more broadly.
So only one day in 2023 so far that we haven't had stage 4 load shedding. One single day in March. And your data shows very clearly, and that's why a picture tells more than 1,000 words, how I think it was very quick to have a look at it. From the second week of September, there have only been 3 days in total that we haven't had stage 4 load shedding. So a very, very big impact. Andre de Ruyter's book, Truth to Power, has been, I suppose, agreed or supported in certain areas, and in others, some people have been critical. What's your take on it if you've had a chance to read it yet?
So my sense is that what it did was it gave us, for the first time, a much clearer insight into some of the dynamics both within Eskom and within the political management of Eskom. And even if you don't necessarily trust all of the information that's provided, that's personal choice, it gave you some idea of the complexity of it, how difficult it is to manage it, how difficult it is to get it under control in terms of corruption, how big and how severe the extent of corruption was. I think it's an eye-opener. And to me, what it's done is it's made it a lot clearer as to the challenge that is ahead. And it also took away South Africa's kind of innocence around this belief that things were being worked on. Let me try and explain that a bit better. So there was this idea that in the background, people at Eskom were trying to put Eskom in better shape, and that over time we would see that emerge. And I think what de Ruyter's book did was it clearly demonstrated that up until very recently, there's been massive problems within Eskom and no real progress in putting it into better shape. And therefore, it suddenly dawns on business, on individuals, that nobody's coming to the rescue. And I think it's becomes part of the catalyst for the surge in renewable energy investment, because at that point you recognize that you've got to make a plan. You can't sit and hope that somehow miraculously this is all going to come right, and that you've got to take your future sort of into your own hands. And I think many businesses have done just that.
The shock of Kusile having 4 of its planned six units off stream, one of them because of a collapse of a chimney, which took 3 of the plants off stream, and so on. It's just the deeper you go there, the more the concerns are. The one thing that De Ruyter did tell us was that we needed to move towards renewables, and he worked. He wrote a lot about that in his book. Just so for those of us who don't understand, why is it so important that South Africa, and in particular Eskom, gets its carbon emissions under control? And I guess here I'm talking more about bringing in capital to be able to meet the long-term demands of this economy.
So I guess there's a range of reasons here, right? One of which is simply the international finance that we've managed to procure. A lot of that finance has regulations attached to it or requirements attached to it with regards to carbon emissions. And there's no doubt that we're going to need additional finance going forward. And therefore, in order to procure that finance, or at least be assured of future finance, we need to adhere to certain targets. The second is that South Africa has to play a role in terms of environmental protection. You can't have very old power stations operating without any sort of plan to reduce those emissions. So I think irrespective of the international financing, there is a responsibility on South Africa to mothball very old power stations and to become more conscious of the environmental issue. The third issue is clearly in terms of just the diversification of your power base, right? You can't just rely on one power source in today's world. I think that's not a great plan as it's materialized. And so I think to diversify into a range of different options, including renewable and including nuclear, we've got a reasonable amount of nuclear. I think that makes a lot of sense. And so we move in at least in that direction. So it's not that you can say, well, we're going to close down coal entirely. That's just not possible at this stage. But you want to get to a position where you can definitely mothball the older ones, when you can have your average emissions going down and where you can diversify. And there's also no doubt that in terms of new technologies and costs, renewable energy has become a lot more viable, a lot more affordable, and it's something which I think we will continue to exploit. And I think in the end, we're going to end up with a hybrid of different types of power sources. And I would say that that's a good outcome in South Africa's case.
And it certainly has been successful. Any way you want to look at it, thank heavens there were renewables that were brought into the system. As you pointed out, more than 4,500 megawatts of new power generation projects have been registered since 2018. Interesting to see that the bulk of those are in a very poor province in the Northern Cape.
Yeah, so a lot focused obviously on the solar stuff. We tend to be focused on that more than wind. And I can understand why in terms of, I guess, the climate in South Africa. And I think that there's a lot more that you're going to see in that space. I was just updating the data for the end of June in terms of how many projects have been registered on the NERSA website. Another big jump in the number of companies registering their project, another increase in how many megawatts are going to be invested in. And so I think that the private sector has overwhelmingly embraced this as an initiative, and all of that excludes the household sector. We don't really have a good estimate of how much is being put in place within the household sector, but I think in total, if you look maybe over a period of 24 months, 36 months, I think it's going to have a very, very substantial impact on South Africa's energy mix. And that's to be welcomed. And to me, the message coming back from that is that if you deregulate, if you allow the private sector in, the private sector will respond. To me, that's the overriding message. And the private sector has responded emphatically, and I think will continue to do so, and will respond in other sectors if they're given the opportunity.
I want to share a little personal thing here. When we moved our home recently and then found a place to buy. And the first thing we did when we bought was to address how, because of the work that I do, how do we have uninterrupted power? And I interviewed the CEO of Go Solar, which is exactly what you're talking about. It's a private sector company that is in putting in installations into the residential, into people's homes. And I went through the normal process, though I was very impressed with them. And I've got it within a few weeks. And he did say the lead time was, I think, between 2 and 4 weeks. We've got it in the home. It's on our ceiling, on our roofs. And I asked him, because it was so quick, it was all done in one day, and there's 14 panels, I think, here. I said to him, what is he estimating? And he says, well, they alone, this is just one company, will probably have 500 megawatts installed within the next couple of years. That's half a level of load shedding from one company alone. So the point that you make is very relevant indeed. The private sector is coming to the party.
Absolutely. And it's also, there's other benefits, right? It's creating business opportunities. It's broadening out the skills base. There are many companies who were perhaps doing something else. I've spoken to companies that were doing electric fencing and struggling to make the business work. And now they're installing solar, and they can't keep up there. I spoke to a company that was doing Wi-Fi installation in small business, and they converted their business to more solar installation, and they can't keep up. So I think it's reinvigorated a key component of small business in this area. And some of those businesses have become quite substantial and are doing very big projects. And I don't think it's something that's necessarily just a fad. In other words, that you invest in this for a couple of months and then the whole industry peters out. I don't think that's the case at all. I think there's a long-term basis for this industry. I've also got no doubt there will be technology advancements in the sector, and I think you'll get improvements as we go along, and that'll inspire further investment. So to me, this is a good industry for South Africa. What you would want, obviously, is we make more of the stuff ourselves. We're importing a huge percentage of all of the equipment that is being installed. There are, I think, 1 or 2 solar plants that are operational in South Africa. They manufacture solar panels, but that needs to expand, and I think there's a big opportunity there, and there's potentially an export market on the back of that. But I would say this is one of South Africa's clear success stories, not just in terms of how many panels we're putting on, but the speed at which the industry has responded to this once the deregulation came through. It's been phenomenal.
Oh, it just again reflects that we do have a very potent private sector. Sometimes government just needs to get out of the way. At the real focus, though, in South Africa, as you mentioned earlier, was solar power, and wind, I guess, is an area where certainly from recent experience of the weather, where there must be potential as well. But what about the batteries, Kevin? Isn't that the big story? That if the wind isn't blowing and the sun isn't shining, you can't rely on this at the moment. If you have batteries, well, maybe you could.
Yeah, I think that's exactly right. I think the way I see it, Alec, is that the batteries were less of a priority initially. The focus was, let's get the power generated and let's at least get some of these plants installed, and let's start to make a difference. And we've been doing in this country solar now for many years, and a bit of wind. And those investments have, on the whole, been very successful. I know where I am in Stanlib, we've invested in big solar plants and wind plants, and they've been incredibly successful. So I think now the focus is, okay, how do we deal with the next issue, which is very obvious, and that is, it's only sunshine so much of the time. Is there anything we can do about that in terms of battery storage? So I think you're now seeing that focus on storage. The other thing that has helped enormously is that the cost of storage has come down. The technology involved in storage has gone up substantially. And I think it's now a viable thing for South Africa to look at. And I think you're going to see more projects in that area. And I think it's the storage which can make a substantial difference, because there's no doubt that at some point, we're generating power that we're not able to utilize. It's essentially being wasted. So the more we can introduce storage, the better. And I am expecting to see that being upped over the next couple of years to make a real difference to the baseload.
You also, in your raft of graphs that you sent out to your clients this week, spoke or reflected on the Eskom energy availability factor. And it's way below where it should be, or at least even where the government thinks it should be, and indeed continues to decline. Is there any hope on the horizon on this side? I know when I interviewed Jan Oberholzer, the ex-chief operating officer, he said they're starting to see a little bit of benefit because of the maintenance that has been done over the past 3 years since Ruyter and indeed Oberholzer took the tiller at Eskom.
Yeah, so to me, this is critical if you want to assess Eskom, simply in simple terms, what percentage of their installed capacity is working. You don't really want this in an ideal world to fall below 70%. Most places set a target for themselves at around the 75% level. The minister set a target of 75. The board of Eskom said they felt a more realistic target was 70%. Doesn't, in the end, I'm not sure that matters. The issue for us is that you can see the energy availability factor has diminished, and in not long ago this year, we got down to 50%. And if you had 50%, that is horrendous. And then we know that the load shedding goes up. You get to stage 6 or higher under those circumstances.
Kevin, explain that. What exactly it is. Does that mean it's 50% of what the nameplate production should be? In other words, if you've got a unit or Eskom it's got 47,000 megawatts supposedly installed, but actually they were only producing half of that.
That's right. So it just says what is the potential if everything was working 100%? What is the output? What is the installed capacity? What should you be producing? And then it says what percentage of that are you actually producing? And that's the percentage that matters, because if that percentage goes down, then you're going to have load shedding, irrespective of whether you winter or summer. That will change the peak levels, obviously. But at 50%, no matter what, you're going to have significant load shedding. And so that's what happened. South Africa got into a phase where towards the end of last year, and certainly the beginning of this year, the energy availability factor came off dramatically. Now, 1% might not sound like a lot, but in South African terms, it's huge. So if you go from 55% or you go from close on 60%, and you take that percentage down to 50%, that 10% of your capacity that you've lost, that's what did the damage to South Africa, and that's what really caused the economic pain. So if we find ourselves going back to that 50% level, that's when we have a significant problem that's difficult to deal with. Now, more recently, this percentage has gone up. And the number that we're dealing with at the moment is around about the 58% level. Again, nowhere near what we want, but it's a bit better. And as soon as you get it up to about the 58% level, then you are more into a reduced element of load shedding. You haven't eliminated load shedding. You have to do way better than that. But you are at least into a more manageable level of load shedding, and it won't feel as severe. If you can get the percentage to be over 60%, let's talk about 65%, then you would be into intermittent load shedding, where on many days you wouldn't have load shedding at all. So it gives us a yardstick as to whether we can measure the progress that's coming out of Eskom. Now, the improvement more recently, we need to understand why has that come about. And the key factor that has caused that is less stuff is breaking. In simple terms, less stuff is breaking. And what we got to try and understand is why is less stuff breaking. Now, we don't really know. What we think is happening is that the maintenance that has been put in place is yielding a better outcome. That because we've done maintenance on a on an elevated level for a period of time, that the maintenance is working, that we're getting less outages simply because we did better maintenance. It is, of course, possible that we're purposely breaking less stuff. In other words, the sabotage that was going on in Eskom has been reduced. That's entirely possible, but you don't know that for sure because we don't have enough insight into it. When we look at it, it feels that over the last, I would say, 6 weeks, it's a short period of time, that there has been this improvement. And because this improvement has come through, we've got less load shedding stage 3 or lower stage 1, and it feels like it is at the moment sustainable, right? The problem will be two things. One is if something breaks, we'll be quite quickly back into increased load shedding. That seems like it's difficult to forecast, but something could break. And the second is that the level of maintenance, planned maintenance in Eskom, is not especially high at the moment, which is kind of a winter thing. And so if Eskom ups the level of maintenance, which they would be expected to do over the coming months, then the energy availability factor would go down because you're purposely taking units offline. So I don't think we're out of the woods. I think there's a lot of risk within this number. But, Alec, if we just have a little bit of optimism here, imagine that we can keep this energy availability factor at about 58%. We just hold it where it is, right? Which means that nothing significant breaks. Let's just go with that. And in the meantime, we continue to fix the Kusile units. And let's say the Kusile units come back online at the end of the year, which is the schedule. And that we get Medupi Unit 4, which was scheduled for August next year. They said they were going to try speed that up. Let's call it the middle of next year. So we get Medupi Unit 4, middle of next year. We get the Kusile units on this year. Then we would get that energy availability factor well over 60%. And we won't eliminate load shedding, but we go back to intermittent load shedding, which would mean those yellow dots are not every day. They are intermittent, and even the load shedding that we have is reduced. That's the prognosis, that's the hope, that's the outlook during the course of next year. And then if the private sector continues on with the investment that they've put on the table, and I believe they will, then in 2025, so that's some time away, you would then have an environment where you have no load shedding, right? However, that assumes that we're only growing this economy at about 1 to 2%. If we said, okay, now we want to grow this economy more, we want to grow this economy at 3%, 4%, 5%, we don't have anywhere near enough electricity to do that. That's what we have to deal with as a kind of second stage of investment, where we say to ourselves, how do we improve the overall capacity? Now, we're not doing that at the moment. All we're trying to do is trying to mitigate load shedding. That's all that's going on. Do some maintenance, do some renewables. Let's mitigate the extent of load shedding. Let's get this economy growing between 1 and 2%. That's all we're doing. The next round of thought has to be, okay, we got there. How do we take the growth rate up to what we require? 4%. How much electricity would we need to sustain 4% growth? That's going to require a lot more investment in transmission capability and in power generation. So I'm slightly more optimistic. I think we can get to the intermittent load shedding next year, but I haven't seen anything being put on the table right now that would make me confident that we can eliminate the electricity outages to the extent that it would allow our economy to grow faster, 3-4%. I haven't seen that at all. And without 3 or 4% growth, this economy will feel like it's still stagnating. So there's a long road ahead. There's no quick fix to this. But hopefully, we can get Kusile units back, Medupi back, and we have intermittent load shedding.
Kevin Lings, Chief Economist at Stanlib, just to throw a little bit of a dampener on all of that. Jan Oberholzer reckons that one of the major reasons why load shedding the load shedding picture has improved is because the diesel is being run at full tilt. He said during his period as COO, they would spend 6 billion his budget was 6 billion rand a year for diesel. In the last 3 months, they spent 9 billion. So it kind of puts it all into perspective. But Kevin Lings, as always, thank you for taking us through a complicated subject and making it so that we can all understand it. He's the chief economist at Stanlib, and I'm Alec Hogg from biznews.com.